Welcome back. Time for our Monday Special Midcap Mania with Nigel DSouza, and the stock on his radar is a specialized polyester manufacturing company which has gained over 25% this month. Nigel, what's the stock that you're referring to?
Anuj, the stock that we're talking about today is Sarla Performance Fibers Limited. As you said, for this month itself, it jumped up by close to around 25%, and the entire gains that we've seen in this year has come in this month itself. So at the start of this month, otherwise the stock would have been absolutely flat. Just want to note that it's not a normal fiber company. It's a specialized fiber company, not the traditional commoditized yarns. So that's why, in fact, this company, they get a tad bit better margins than a normal fiber company. But let's run you through the points. The stock move, in fact, is up for you on the screen. If you look at it from the start of 2014, it's high by close to around 152%, while in this year itself, the stock has given you big returns of around 25%. As I said earlier, the full gains have come in this month itself. And in 2014, that was the reading that came up. The previous plate should come up for you. It was higher by around 140% in the year 2014. So it had a good 2014. 2015 was quiet, and this month, in fact, it's taken off. If you take a look at it, the market capitalization of this particular company should come up. So in financial year 2009, it was only around a 25 crore market capitalization, and today, I think, put today's move as well in there, it's nearly around a 450 to around a 500 crore market cap company, telling you that in the last few years, the CAGR has been close to around 6% if you look at it over the last 6 years. The shareholding pattern as well should come up for you. Promoters hold roughly around 55% in this particular company, and DIs as well, they hold close to around 17%. That's primarily because the company did a QIP last year, and HDFC picked up majority of that stake. So the fund holding as well should come up for you on the screen. HDFC, DSP, BlackRock, we have Cantor Robeco as well in there, and Tata Balance Fund. All of them are the big funds that hold stake in this company. The point you need to know, though, it's a very tightly held company, which can be a good, which can be a bad company, a bad thing as well. Because if you look at it, 2,872 shareholders hold the remaining 44.8%. So that's you need to take note of that, because a tightly held company can always give you a big move either which direction. Let's take a look at the financials. Looking at last year, FY15 versus FY14, nothing great. The top line was higher, margins were more or less stable at around that 15-16%, and profitability as well was more or less flattish. So FY15 wasn't a great year that we have to see such a big move in the stock. If you look at the CAGR of the last 6 years, that's the revenue as well as the profitability. It's grown by roughly around 14 to 15% in the last 1 year. The EPS, though, was around 37 rupees per share. So if you look at it on the trailing earnings basis, stock is trading at around 15 to around 16 times. And what's the big trigger for the stock? They had commissioned this one plant in the United States, that's in South Carolina, and in fact, that particular unit is supposed to be the big kicker for the stock going ahead. Remember, it comes under the NAFTA as well as CAFTA, that's North America as well as Central America, and they get some duty right back. So on the back of that, in fact, if the unit can get up and start functioning at around 50-60% capacity utilization, then it will be a big positive. As per the last quarter, it was only at around 25%. But there are challenges as always. It doesn't deal with retail customers. So in fact, inflation worry always exists. You have the US plant, suppose it doesn't go up to around the 30, 40, 50% capacity utilization, then it will be a bit of a waste, and raw material sourcing as well as forex fluctuations is something that the management has noted in the audit report. Those can be some challenges as well. Nonetheless, stock is a big gainer this month, so that's why I picked it. That's a stock up for you on your screen.
Oh yes, as you said, 30% higher this month. But if the earnings may not justify the up move in the stock, Nigel, any reason why there has been this big move? You were talking about the plant, but and any other comparables, any peers that we can compare with?
No, Sonia. In fact, you can't compare it with any other peer group, because they're dealing in the specialized fiber. So it's not a traditional fiber business. I was just speaking to Malu earlier today, and he was telling me that they give margins between around 7 to around 10%. As I showed you earlier, the margins in last year itself, which wasn't a great year, was at around 15 to 16%. Now, if that US plant gets up, gets kicking, it's looking really good. If it can go even to 70-80% capacity utilization, then I'm told as per analyst that in fact that EPS of around 35 to 40 rupees can even go up to around 65-70 rupees. So then in fact it could be quite an attractive stock. But you need to note that currently, as per the last quarter, as per official confirmation, it's only at around 25% to around 30%.
All right, Nigel, thanks a lot for that. That's one big mid-cap performer. But